So, testing. Cool. Looks like I got audio. Let's queue up ChatGPT. Hey, ChatGPT, what are you doing?
Hey there, I'm just here. Yep.
You completely cut out. How are you working today? Are you glitchy?
Oh, sorry about.
Oh, yeah, you're glitchy. All right, so let's see what we're going to do. Let's close that out. Close out some stuff. Keep that open. All right. Close out OBS. And let's see. What I wanted to do, guys, was just play around with things. I got some time to kill. I'm not sure what I wanted to do. Let's get on my dashboard. You guys don't need to see this stuff. Let's see how Twitter's doing. Ooh, let's see. Let's go. What are the Bitcoiners up to? No. At 109 on price. Let's view this. Let's see if we can zoom out. All right. Let's go month. So when I'm looking at Bitcoin, I don't even care about this. The day, week, don't care. Month, don't care. I always go to 1 to 3. And the reason I go to 1 is I track the progress for the year because I price average strategy in. And so what I'm looking at is how's my money doing had I been investing at all these points, particularly the start of the year. Start of the year, if you were investing at 60,000, even though it's stagnant up here, you're still doing great. Okay. Now the key is for Bitcoin 3 years or above. I like the 4-year cycles. This one's garbage right here. The reason I like to look at 4-year is let's pull up Google. Google.com. Google.com. There we go. Bitcoin halving chart. So what I like, the way I think about Bitcoin is over the 4-year business cycle. And looking at halving charts is the best way for me to understand the cyclicality that Bitcoin goes through. And here is a great representation of that. Here, if we pull up this chart, Bitcoin's market cycle. Now, without reading this in, I'll just kind of explain to it. Okay. So this is a logarithmic scale of Bitcoin since its inception. Okay. So if you're looking at it in a day, you're not going to see any of these major dips. Okay. And then the way this scale works is it's showing you kind of this nice little arc across, right? This nice little pretty little arc. So as you can tell later in Bitcoin's life cycle over here, it is kind of flattening, but we can expect, you can see this little arc. It was pretty steep at first. So you saw Bitcoin have massive growth, right? And then it's now growing ever so steady. But the thing to equate to is understand that this vector, this parabolic trend curve, is also shrunken down. If you look at your y-axis, you can see that the gradient separation, the 1, 10, 100, 1000, okay? So you are compressing the measuring scale as it's going vertical, okay? So even though this trend is relatively flat, if you think this trend's going to follow over here with some curves, okay, to eventually end over here, if you look and you drag it across, it shows that eventually the next gradient, all right, so you follow the trend. The gradient is adding another 0 to the chart. So at what point do you think this flattening trend curve, well, we can say over here maybe, if it follows that same kind of cross vector across. And so let's measure this out. I'm going to hold my fingers up, measure this way. Okay, I'm holding it up to my screen. I did a little 5-inch. 5-inch on my screen display is roughly 2018. So 1, 2, 3, 4, 5, 6, 7-ish years to get to this top corner. If we cross that over vectorally, this white gray, we can estimate that we can add in an extra 0 on Bitcoin's price within the next 7 years. What does all that mean? What did I just do there? So I took a shrunken down logarithmic scale. What it does is it allows us to kind of look back further in time and look at broader scope trends in the market. The way I think of it is it gets you out of that day mindset of it's down, up 50%, it's down 10, up 20, down 85, and gets you out of that trading sphere and just thinks, okay, I'm going to buy today and I'm going to hold a chunk of Bitcoin for 10 years. And what kind of growth projection can we anticipate? Okay. And so this looks at just long-term growth. And as you can tell, even the most major drawdowns in the red average at rough actually are getting lighter and lighter. So these red cycles show the major drawdowns in the life cycle. Okay. So in the future, we can expect less than 77. So 75% drawdowns in the future as we move forward. Okay. But we can also expect lower growth margins. So the growth trends will be slower, but the drawdowns will be slower. That means more people are bringing in more money, and it's going to take more capital to really make bigger fluctuations, but it's going to have a more steady trend over time. So if you hold for long periods of time, you can see massive growth. So what is also logarithmic scale show us? Okay, so even though 7 years, it only goes up a couple moderate percents, adding an extra 0 to something that is already measured at 100,000 right now. Okay. But right here at the top of the chart, you're looking at 1 million, a spot price of 1 million. And you track this along, right? We'll say right about here. So you follow that trend line, you draw a nice little curve right to about here. 3, 1, 2, 3 gradients, maybe 4. And like, look, those are only 4 years. So 4 to 5 years, you're looking at $1 million worth of Bitcoin. Following this standard trend. This is already the historical trend. So without any extra prediction, right? Is it going to hit that exactly? I don't know. You don't know. You never know. But following its historical trend out, knowing how eventually, over time, more and more people are going to utilize it. More and more people are going to find this valuable technology. And if it follows the same trend, we can expect within the 5 to 7 years that it'll probably hit $1 million. And then another 10 years, it might add another zero on top of that. So you're looking at $10 million worth of Bitcoin following, just looking at this chart and projecting it further out to the future of, that's off the chart, following just the exact same scales of how they've measured it. So lower drawdowns, less draw ups, the seasonality. What I like about this chart also in log scale is it shows the 4-year cyclicality of Bitcoin and the market cycle. Okay, so if you think of Bitcoin as the most rigid asset, okay, it is a bucket and a sponge of all currencies that we print into the market. It's a fixed supply. So essentially anything you attach to it, it absorbs that value over time. Okay. So because it's fixed, it shows you the most accurate fluctuations of valuations and money printing into the market. Okay. And you can see when the major draw ups of demand price surges. You can see when the market contractually pulls money out, when it flatlines, and then it goes through all these winter, spring, summer, fall. So what they've charted here in the color is essentially the seasonality of the market. But Bitcoin, because of its rigidness, of its fixed supply, it shows the most accurate representation of the market cycle, of where we're in, with a little bit of a lag, but it shows. So green here, they represent it as growth, okay? Steep growth. Yellow is the bubble, so massive upswings, okay, to a peak. And then you have, after it peaks, you have the crash, the drawdown. I don't like to use crash. I like the drawdown because it never crashes. Crash would go down to absolutely nothing. But it's just this one from the peak to the drawdown was 87% crash. Okay, and then accumulation. That's where it bottoms out on the trough, and then it slowly comes back. So you have from peak to crash, you have about a year time cycle, and then you have about 2 years kind of slow and steady uptick with a massive bubble. So if you one time invest at the right time strategically, you're prospectively looking at seeing massive upsides if you hold for longer than 4 years. And the reason it helps, the reason why you're seeing massive upsides is because of the locked supply. And you also, if you also think, and why we see these massive bubbles as well, these bubbles come right at the point of Bitcoin's halving cycle. So you have 21 million Bitcoin coming into production, and it's not right now. I think it's at 5. It's like 4 or 5 Bitcoin coming into getting rewarded for blocks mining every 10 minutes. I'm not sure. I gotta double check my numbers. But that new creation of Bitcoin into the network every 10 minutes, every 4 years, it gets cut in half. And it's cut in half all the way down to the SAT for the next 20 or so years. So we can actually see the halving cycle. Let me pull up another chart. Google.com. Bitcoin halving cycle plan. Okay. So here's a nice little, let's see if we got any images. Here these charts will show the halving cycle built in. So the same chart I showed you before. Pull this up side by side. So you got this guy. Okay. And now we have this guy. Okay, over here. And look at these tick marks. if you try to measure them out right here, here's a Bitcoin. So you can see from its inception, 50 BTC. So every 10 minutes, 50 BTC was given to miners. And that's pretty much the standard way it comes into the supply of the network. You can either purchase it or you can mine. Two ways to get and attain Bitcoin. Is it either a transaction or transfer, which typically relies on passing money to it, but you can gift it as well. But just like any other economic thing, a transaction over to another wallet, or it is rewarded for mining. Okay, and the mining is just a simple way of doing an algorithm, guessing a number, and getting a reward, reaping a reward for your work to the miners. Okay, so when it first started, it was rewarding 50 BTC for every 10 minutes. And the next 4 years after the halving cycle, boom. It's not based off of every 4 years. It's actually based off of a block schedule. I can't remember the block schedule at the top of my head, but it happens roughly every 4 years because of the 10-minute cycle. Okay, so cut back to 25, and then 12.5. And now we're in a cycle where it's 6.25, okay, as of 2024. Okay, and you follow these lines that match perfectly because this one's logged out as well. Okay, so you can see at roughly around the middle of the halving cycle, you see these massive bubbles. Okay, massive bubbles. And the halvings happen at the accumulation phase. Okay, so if you look at the points, same points, halving, end of accumulation, halving over here. Let me see this one. End of accumulation every single time. Okay, so right now, if we look at this phase that we're in, this one looks like it's up to date based off of the trend. It might be a little bit older. Let's see, as of July 2025. Okay, we're only looking at 18%. Okay, so following the same trends, it's hard to predict because you had a 9,300% increase this bubble, then you had a 2,000% increase and a 200%. So that's a massive parabolic drawdown. So I don't think these match, but we could probably expect maybe 100%, 150% from the start to the finish. So we got some room to work with. Something can happen here. So I stay, but again, I don't really care because I'm here because I expect these other crashes and these accumulation phases to happen. So I'm 10 years in. Okay, so I've been on Bitcoin for about 5 years now. I came in at around this phase right here, and I started investing. So it hurt bad when I invested a massive chunk of my money in and didn't know about halving cycles and all the bubbles. I was new to investing at this time, and so I had to survive this massive drawdown. But now I'm sitting pretty good. And happy with the progress, but it took a lot of education and patience and just kind of like just self-soothing all my crying and not investing and just holding it for a while. But so I'm not holding out for what it looks like. I'm spending a little bit of my Bitcoin strategically to kind of pay off some bills here and there, pay off a car, get out of debt and here and there, but still holding a massive chunk because in the next 4 years, when we're over here, okay, I expect these same cyclical phases to happen. So no matter what the percentage growth peak of this bubble happens here, we're in that bubble phase where it's just going to surge like crazy. Right now it's kind of stagnant, but it might surge. It'll draw down eventually. It will. It's inevitable, right? Because the reason it surges is market volatility, supply and demand. As people see it surge and rip, right? Eventually people are going to freak out and get so tense that any amount of signal in the market sends people into chaos thinking they're going to lose their money because they have such short-sighted, narrow framework. If they started investing today and they're waiting for it to rip, it'll rip. But then they're like, because they're gambling, they're also over anticipating that drawdown. And so because they're at the peak, that massive drawdown makes people cry bad. But if you've been in Bitcoin for 10 years, for more than 4 years at least, and you just know, hey, long-term holding is the strategy. We just ride these waves. And that's all we do. I just follow the schedule. I just look at time in a very, very broad sense. And then be like, all right, cool. Right? So whatever duration of time we have left of this bubble, it'll probably last through the rest of the year into probably February. We might see some peaks, and then some between February and the start of next year, 2026, I anticipate some drawdowns. Okay. Not anything as bad, because you can see that it's steadying out. So maybe a 60 to 75% drawdown, or 50 to 75% drawdown from the peak, which is not too bad. Okay. So now you're sitting at Bitcoin that's probably roughly around less than $100,000, depending on where it peaks at. So we might end up here next year. Okay. So if you're crying, you're like, oh, it's going to rip, and you're trying to sell it at the top, this time next year, you might be sitting at the same point, which is not too bad. But hold it for 4 years. Hold it for 4. Ride this wave. You know, it's a nice cyclical sine wave, right? It's easy. It's predictable, right? Because it's so finite, it maintains. So any pattern we see, because they can't manipulate it into the network, and it's so rigid and finite, we can map it. It's very predictable. So we can see cyclical annual changes on the annual basis. We can see the steady leveling off of the volatility. So that's really nice. As a saver for the future, I can see and I can project, okay, in 10, 15 years, I can project that my line of Bitcoin will be upwards to $1 million or something like that, or whatever I have. So it's comforting watching these trends. And so the last halving cycle just happened. Okay, so right now we're sitting at actually 3.125 is the rewards, because this just happened in 2025 or 2024. So the next halving cycle, 4 years from now, so 2028, you'd be reaping the reward of 3.25 would be 1.75 Bitcoin-ish coming into rewards. Now you're thinking, oh my God, why is halving so scary? This forces miners and people that mine into a supply shock. So that's why you see all these massive accumulations. Why does it rip and then have a drawdown? Well, this is because of market volatility. But the reason miners have been getting Bitcoin this entire time, and they're trying to survive the winter cycle right here. Like, they got to pay their bills. They're going to hold. They're not going to sell into the market until it's, they hit their break-even point. So that's why it doesn't draw down as far. It's kind of locks itself in there. It'll have a little bit, and then it'll survive. You survive winter, and then it starts coming up again. So you see winter, spring, summer, fall. That's the way I kind of think of it. Winter, spring, summer, fall. So winter's that or you could put it to the negative. Winter's cold, depending on how you think of the cold. But I think of winter as like that stagnant, stale period. Spring is that early, flowers are starting to bloom. And then you have that summer heat where everyone's active and everyone's out having fun and partying, enjoying the summer weather. And then fall is that early, it's starting to get dark, the leaves are falling phase. And that's when the leaves come off the trees, and the money in the market and the valuation of Bitcoin kind of draws down just a little bit, right? So if you were in it at winter, you don't even care about this drawdown. You're still up a solid percent. But 4 years, guys, 4 years. Halving cycle, that was the biggest unlock for me of understanding Bitcoin and riding it out, was understanding the business cycle and the halving cycle and how they interoperate. And so as the network effect grows and more money come in, right? Again, Bitcoin's a sponge because of the locked in nature. So if I say I'm going to give you a pizza for some Bitcoin, you have your Bitcoin that you have, and you have the value of my pizza, which was I paid for. So it sucks up economic value of anything you attach it to. The thing you're trading with, the labor that the person traded to get their dollars to pay for the Bitcoin or whatever, right? So that's kind of how money works. Is it attaches itself to work and things and stuff like that. And the most rigid thing right now is this asset. So hopefully you guys got some value out of this. I'm going to close out the stream. I'll talk to you guys later. I got to go pick up my kids. Adios.